Hi there. Welcome to the closing bell on recording it on the 28th of September on the Thursday. So I've actually missed out on some trading. I don't know where markets are at. You will know more than me. So I'll be a few days out of kilter, but it's an interesting setup, that's for sure, where it is right now. Last week sort of sounded the alarm on what the US was doing, thinking that we could see more selling pressure, which really could accelerate to the downside. And I want to show you that setup. But let's just, kick off with that big picture view of those US 10-year bond yields. I think it's interesting what's going on. We've been following it along for a while. This being the very long-term fall in yields from the 80s all the way to 2020. The 10-year bond yield, and this is the yield, of course, yield going down, price of bonds going up, yield going up, price of bonds going down. So you can see just the way it moves and the fact that, we've got this very long-term downtrend which appears to have broken, right? That break above the last cycle high in yields, around 3%, and the break of that trend line from the last few decades. Now, that's an interesting break, right? And it's on the back of inflation. And of course, US 10-year bond yields, really central and very important. Obviously, US yields, the whole yield curve, important for pricing pretty much everything out there, debt, stocks, etc., etc. So very important, and we've been following it along recently. Now, this being a monthly chart, saying that, look, the trend is up. You can see that the trend on the yields is up with the 10-month exponential above 20-month simple, very strong move to the upside. We've had months of an attempted fall in yields, and that has hit the trend line and now turned back up and is breaking out above the high. So it's a continuation of the trend to the upside in yields, or the fall in value of those bonds. And we're now out at, multi-decade high, aren't we? And above the last cycle high, well above. So it's getting into rarefied air here and will affect things. How high does it need to go? Is inflation really under control? Will they need to raise rates actually further than people think? And that can happen. So as these bond yields really race higher into, really no resistance, and serious selling could unfold. So that is a chance that we see a real spike higher in the yields, which would definitely affect stocks. I think it's surprising that they haven't already started selling off at a more in a more aggressive way. But the point that needs to be made is when those rates really start spiking higher, affect the economy, you might end up things turn down very rapidly, hard landing, and then you get the big reversal. So just noting how sharp the reversal can be, and this did end up taking a while. But just looking at in the past, the rates flying up and then things change. Rates flying up, things change. Rates flying up, things change. So just that note of how sharp the reversals in the bonds can be. So as we break out, yes, it can keep going higher, but then if something breaks, it can then reverse very rapidly. And look, the very long-term situation may be that, this has now really changed. The trend has changed, and we are going to see a move higher over time. That inflation is going to be problematic. That we may see something like this, but then it may end up doing something like that, which would be, sorry about that, which would be pretty interesting, but that's obviously a story for another day. But the fact that it has broken out above that multi-decade trend line and is now accelerating through the high, I don't know how many people really expected that. And we just need to allow, that sell-off or the rise in yields to just take shape. And look, it may be over soon. It may hit there and then we get really bad news. And, you want to be a buyer of bonds if something like that happens, of course, as a great hedge on a stock portfolio. But right now, you've got to stand aside and ask yourself what is going to happen now in the stocks if this sell-off in bonds does continue. So switching to the S&P 500, and I'm guessing that by Friday, the market hasn't rallied massively, and that we have got a monthly sell pivot confirmed. So that monthly sell pivot is based on following the monthly candlesticks as the trend marched higher and higher from last year, monthly buy pivot there, and just looking at those key bars, the key bars being once you've got a monthly buy pivot, which is there's the lowest price in the move down, you want a monthly close above the high of that candle, there's your monthly buy pivot, and then a monthly close above the high of that candle, here's your first key bar. So then you've just following those key bars along, and you can see this will be the first time in a year where we've got the monthly close below the low of that highest price candle. So there's your first sign. Potentially, things are rolling over to the downside. And the major point there, often, may not work, but you have more confidence when they happen in important areas. So, and I've discussed this in the past, the fact that we've had that huge wave higher, 2020 to 21, the correction to the point of control, and now the rally up into that sell zone area. So that's the area where I'm waiting to see, is there selling pressure up in this area enough to turn it back down? And when it's sort of confirmed, well, you've just got to be a bit wary that it can accelerate to the downside from there, because you have already had this major correction last year. So people know that there was a lot of selling about. You've had the short squeeze, but if it then turns back down again, people can be pretty quick to hit the sell button. So, it's a very difficult moment, I guess, because it did switch to a long-term uptrend there, but I'm less inclined to just trust that very early on in the process, because that can be a bit of a dummy. And if things collapse through that level, that can be negated pretty quickly. But basically, the way I look at it is from here, I'm negative now with that monthly sell pivot. I'm wary of what's coming next, especially with those bonds doing what they're doing. If we do see selling pressure and then it turns back up, okay, we get a monthly buy pivot, whatever, and we get a confirmation that this monthly trend change is sort of confirmed, because often you get a retest of the moving averages and then it turns up again. That's when you start getting excited that, yes, the uptrend is on. So we're now heading towards a very important moment, I guess, to see, is the selling pressure going to come out of the woodwork now that momentum is turning back down with that monthly sell pivot? I think it will, due to the bonds doing what they're doing. So let's just look quickly at the weekly, just quickly noting that the weekly trend with that 10 exponential, 20 simple on the weekly has, of course, there's always ones that it's not a perfect thing, is it? But about to turn down that weekly trend. And sometimes that is where the momentum really does turn down. So wary of that, because really the weekly has been pretty good in the S&P. For years. Here's a weekly downtrend, weekly uptrend all the way, weekly downtrend, weekly uptrend all the way, weekly downtrend. Okay, you had a little bit there, the spike and failure, weekly uptrend, and potential weekly downtrend. So if it keeps going here, the selling pressure can actually accelerate and surprise, and especially because we've already had this big correction and we're getting rejected from that sell zone. You will note, if you've been watching this, I did say right up here at the top, watch out. This is the top of the sell zone. So to that troll from last week in the YouTube comments, I am actually trying to look at what's coming rather than trying to predict the past. And this state of the market now, just interesting to me. And we know, it's just always going to fly around all over the place. But right now, you're pretty wary of what can come next. I'd say there's going to be lots of selling pressure above if it does rally. And it can keep going here to the downside after breaking that low. And also from months ago, that was a very important level in the downtrend that you can see there from the high. Right. So this was the first sign that maybe that downtrend was over, but then it's turning back down below that level. So selling pressure can just basically accelerate under there. So I'm just wary what happens now, that there may not be as much support around here as people expect. You can see that we had this very strong rally to the upside, and it can just turn back down when you've had just a strong rally like that. If it turns down, it can just keep dribbling lower. And you've got the point of control around 41.50. And look, the way it's looking, I do often see moves like this up into the sell zone and then really go. So it's just one of those moments when you're saying that the selling pressure can actually accelerate. And I'm just interested to see what's beneath the market, whether it ends up finding strong support. And if we just look at the daily, you can see the 200-day moving average, just a bit lower than here. And it's trending up. So you're sort of saying, well, it should hit there and then turn up. If this turn in the 200-day moving average, you can see the slope of the 200-day, things looking bad, slope turning up. So it's saying, okay, this might be trending up. And it's, we did lots of work around the 200-day there, trying to break up, trying to sell off, and then it broke away. And, big, nice run to the upside. So here's a test of this 200-day moving average. Is it going to provide support, or are we going to slice through it and see real selling pressure? So that's why we're getting to a pretty interesting moment now that we've broken below that low. Last week was when I sent that warning saying, watch out. The selling pressure's continued. Does it continue even more and surprise everyone by actually trending down? So that's what I'm waiting to see. That's pretty much how I've set people up in one of my services, Retirement Trader. They'll know we've taken evasive action recently, and I really have just been buying those uranium stocks and pretty much taking it very easy. And in the micro cap, and small cap space, I mean, we know it really is incredibly tough out there. One of the toughest conditions I've seen in many years, with the rates flying higher, companies ducking for cover, trying to raise money, companies that aren't making money getting absolutely hammered. We're nearing a phase where we could see another wave of capitulation in that space. And some of these companies are already down 70, 90%. I mean, it's ridiculous where they're at. So I think there's going to be an opportunity pretty soon where you're going to be able to pick up a lot of these companies, like the former market darlings that everyone was trying to get long in that lithium, rare earths, nickel, copper space, and in tech, etc. That you're going to be able to pick them up for really cheap levels. That's why I'm opening up to current members of our services at Fat Tail, 300 places in my Fat Tail microcap service. So please, if you can check out the presentation I've done there, where I'm really describing how nasty it is out there, but that it is getting time to get ready if we see another wave to the downside, which I think is unfolding. This is what I've been predicting for a while, and things are, pretty much panning out, as I've been saying. I've been calling uranium higher, been calling oil higher as well. So hopefully I've done enough to show you, if you're not a member of one of my services, that I do actually know what I'm doing. And yeah, I'd love you to check out the presentation that we've got going for the next few days. So this is the emerging companies index, and this was the huge rally we saw, and boy, is the heat coming out of that. So you can see the last few years since the collapse last year, this looks very different from the ASX 200, doesn't it? It's on its knees still. The downtrend there, monthly downtrend, still in play, and selling pressure and about to break below the low. So this is why I'm saying another capitulation event can happen. How far it goes, I don't know. But from here, even if it gets down all the way down to there, I'll be pretty excited. Any reversal from down around this area is going to be pretty interesting, I think, for long term. If you're looking up sort of just long term sort of trends, this is going to be a great moment, and it's pretty rare to get a situation where you've got pretty much across the board stocks getting absolutely hammered and sold for next to nothing. So I think it's pretty exciting. And look, it's for the high risk punters out there who are willing to step up. But yeah, I'd love you to check out my Heroes and Zeros presentation. All right, well, I think that's enough for today. Batten down the hatches if it does keep accelerating to the downside. And I'll come back with more next week. Cheers.